Great. Well, I think it's tough to follow Ron there. I think in the beginning he was setting up the macro landscape very well, so appreciate the background there. And obviously I'm not Christine and Chris, I'm just Chris Baker. So part of the Fidelity Digital Assets team. I don't know if I've spoke to anybody in this group, but we work with really a wide range of institutional investors, and really what we'll talk about today is really focusing on education. You know, the goal isn't really to sit up here and say this is better than that, but really just to say this is what is out there, and this is what Fidelity's focused a whole new business unit on. And so my role in that team is part of the business development team, and I've been with that team for about 3 years now. Before that, I was part of the Fidelity institutional team, more broadly working with broker-dealers and RIAs. Before I jump in, though, I am a little bit curious. I think, Ron kind of ended with, millennials, they like crypto, they like digital assets. I'd be curious in the crowd if there is, by a show of raise a hand, if anybody here owns digital assets, and then I guess the follow-up would be who thinks it's a scam. So we'll kind of get a poll of both sides if people would, who believes in digital assets and maybe holds it in their portfolio. Probably around maybe 40% of the room, and then I guess who on the other side thinks it might be a scam. A few brave souls out there that still stick by that. That's perfect. So if we jump into it and really looking at this, what I'll walk through is what Fidelity's done is the last 3 years, basically we've done a survey for 3 years looking at around 1,000 institutions to say, what are your perceptions of digital assets? We just polled the room broadly. I'd say it's tilting more towards maybe a positive skew, but there's still people out there that think, very strongly that this is a scam and we're going into, a weirder reality that could be the metaverse. And so then I'll talk through some of the adoption trends, what we're actually seeing, people actually implementing in portfolios, and then how they're doing that. And lastly, looking at some of the broader ecosystem, things like Lightning Network, DeFi, and stablecoins. So to take a little bit of a step back, so the role that I sit within, Fidelity Digital Assets, we're about a 200-person team. We didn't just grow out of nowhere. Obviously, everyone in this room is probably familiar with Fidelity Investments broadly. We're a wholly owned subsidiary of the parent company, and I give a lot of credit to Ned Johnson, so obviously Abby's father. In 1999, he started the Fidelity Center for Applied Technology. And that was really Fidelity's ability as a private company to say, we can look at disruptive technology. How could we help our advisor relationships? How could we help our retail clients and potentially improve their experience, but also maybe become a little bit more efficient as a business? And so along the way, we started in 2014, which may surprise some people, we started Bitcoin mining. And so what that is Fidelity basically took some proprietary capital, a few resources within FCAT, and said, let's focus and start to understand what is this thing called Bitcoin. It feels like it's futuristic, it maybe has some value, it maybe doesn't, but we have the time, we have the resources to set up a small mining operation, and we just learned about it. We learned what it meant to be a miner in the ecosystem of Bitcoin. What does it actually mean to be mining blocks in the blockchain? And that, fast forward, obviously led up to a massive run-up in 2017, and I wouldn't blame anybody here that raised their hand saying Bitcoin's a scam. In 2017, we ran up to $19,000 in a matter of months. And I remember I wasn't in this role at the time, and people were just throwing money at the space. And then subsequently in 2018, the price dropped 85%. That's about the time when I told my family I was moving into digital assets professionally. Didn't really make a lot of sense when the price was at 3,000 and everyone kind of was scratching their head, why would you move in now? But really it was this futuristic, I would say, vision in looking at how we think of money. And I think Ron did a fantastic job looking at the macro backdrop. People say, do we see inflation? Is this potential inflation? I think, in real time, we're seeing that in our day-to-day purchasing power of the dollar. And so there's a lot of things that happened over the last year and a half that probably were unprecedented, could never have been predicted with, everything that went on with COVID. And what happened along that, so slightly before, in 2018, we launched this group called Fidelity Digital Assets. And really I would say it was a conjunction of Fidelity's interest in the space to satisfy an individual need for the company to hold its own Bitcoin, but even more so, we were hearing it from retail investors and then the likes of broker-dealers, RIAs, family office saying, we want to learn about this space and maybe get exposure, but we don't know how to do it. There is no Fidelity in the space. We're looking at names like Kraken and Binance and Coinbase, and while those have grown substantially since then, those are not the Goldmans, not the JP Morgans, not the household names that we're used to in financial services. And so really from Fidelity's vision, we look at this as, I would say, an option for the entire business. What if this really does disrupt capital markets as we know today? Does Fidelity have the opportunity to say, we can get ahead of this, we can understand it, and start to implement a platform that would then be available for retail clients, financial advisors to say, if you'd like to express an opinion on the space, this is now available. And so I think we do see a transition that could happen over time where we do start to see assets live in a bit of more of a digital sense. And so since 2018, the study that I'd mentioned, we did it alongside the Greenwich Associates, and basically what it was, looking at anywhere from 700 to 1,000 institutions and basically saying, do you believe in the space or do you think we're crazy? And when we look at some of the perceptions over the last 3 years, I think it aligns with what we heard in the room today. It was really, there is a smattering of folks that said, well, there could be value here. But I think the short answer is that there's definitely been increasing adoption, and the perception around it has definitely gotten more positive. And so when we look at financial advisors in particular, there's definitely where there's the most, I would say, split. It's pretty even down the middle of those that think there is some opportunity, but also those that say, I'm not touching that, whether from a regulatory standpoint or just general personal opinions around the space. And so I think the goal of really today is just to say, here's what Fidelity is doing, and maybe to give a little bit of education of what others maybe in the space, your peers, might be touching along the side of Bitcoin and other assets. And so if we look at, looking at the macro conditions, I think this touches on a lot of what Ron spoke to, where you see what we're looking at interest rate changes. We saw it in Europe where you go to negative interest rates. Now you're seeing it across the globe where you're basically getting nothing in your fixed income portfolio. And so people are looking for opportunities to find yield. And this is potentially an opportunity to shift away from an asset where you weren't really earning anything for the broader portfolio. And could you start to look at an asset that is really, I think, hard assets at this time when you're trying to fight inflation? And so when people like Paul Tudor Jones and other large investors in the hedge fund space, they looked at the whole gamut of hard assets, whether it's gold or Bitcoin with its fixed supply, they basically said nothing is perfect. But if you look at the characteristics that underlie it, Bitcoin actually did come out as probably one of the better options that is available today. It's programmable, you can see it as fully transparent, and it's decentralized. So you're not relying on any central bank managing the policy, reliant on, if you're outside of the US, potentially monetary and fiscal policy that you wouldn't agree with, and you've actually seen things like hyperinflation in real time. And I think it's funny at the bottom, you see potential inflation. I might argue that we're seeing it in real time and experiencing it. If anybody's been up to Boston, there's a favorite sandwich shop of mine, it's called Monica's in the North End. Maybe 18 months ago, a sandwich was $14, which I wouldn't say is cheap for a takeout sandwich. 6 months later, it's $16. Now it's about $20. And you kind of saw that in a matter of 18 months' time. So what happened to my purchasing power? I don't think that my salary went up in that same magnitude. So you're looking at the purchasing power almost eroding in real time, and people are saying, what are my options? How do I approach this? How do I handle that? And so I think if we look at the adoption trends, what we've seen from both financial advisors, but really just broadly the institutional landscape, there's no question the US is increasing. We're seeing it go, obviously, from left to right and increasing from 22% 3 years ago to about 33% now that say, we are adopting digital assets in portfolios, but we are far behind Europe or the Asian markets. And I think a lot of that has to do with accessibility. So if you look at, in whether it's Canada or Europe, they have ETP type products. So they're not going out and having to purchase spot. So they're able to do it in a fund wrapper that's a little bit more familiar. It might not just be, the Grayscale Bitcoin Trust where there's quite a premium or a discount. You're playing a bit of a dance in a product like that, or private placements that aren't necessarily available to all investors. If I'm a financial advisor and I have a broad book of business of, say a $500 million book, not all of my clients are going to be accredited investors. And so therefore, they're not going to have access to these products in the US. And that creates, I think, this gap that we're seeing where the European markets can say we can have it in a broader portfolio if we even believe in the space. And so that's probably the biggest first hurdle that we see from everybody. And I think the two segments, interestingly enough, I'm not surprised by family office, but I am a bit by financial advisors, that we saw a dramatic increase. Basically, we saw family offices go from around 20% and essentially double and say that they're seeing a massive uptick in adoption. We've experienced this in our business. Family offices are definitely faster maybe to jump in, or the patriarch is willing to listen to their son or daughter who might be a millennial and say, let's actually take a small position in this space. Financial advisors, I empathize with anybody in this room that works for a broker-dealer. There isn't really an option at this point. Even if you wanted to be in this space, you're still a bit handcuffed for what you could actually do for a client. We deal with that all the time. We've gone down the path with a number of broker-dealers, and it kind of comes to this staring match. What is Fidelity doing? What is XYZ broker-dealer doing? Do either of us have the answer on a regulatory framework? And the answer is probably not. We're looking for a little bit more clarity there for there even to be that option available. And I think that leads to the barriers to entry. And so I'm touching a little bit on the regulatory side there. Particular institutions have challenges. If you're a corporation, you're looking at the accounting principles. It's not perfect. If you were to have to actually take the impaired value of Bitcoin each quarter and you're a public company, most CFOs have looked at us and said, we're not willing to do that because you're going to take the hit on your earnings per share. That makes sense, and that's obviously something they can't control on their own. And then I think from the broker-dealer side as well, there are still those challenges to look at FINRA and the SEC to get further clarity. And I think from Fidelity's standpoint, it's really, we welcome the regulation. It's not that we're shying away from it. It's, we want to hit the audit levels. We want to make sure we hit the balance sheet capital or even exceed it in this space to make sure that there is a comfort level to say, this is an institutional product and it's growing and it's sort of tipping the scale to where this is now almost available to, the broader market of financial institutions. That doesn't happen though if we don't get thoughtful regulation. So I think that's been our challenge, and obviously Fidelity's lobbying efforts is to say, how do we look at the space and say, Hester Peirce or Gary Gensler, can you put a thoughtful, position here in front of us for why we can't have an ETF or, why we did a futures backed? And so that's something that we're experiencing in real time. It's fascinating to see the products that are being approved. And so I think it is one step further with most recently there was a ProShares Bitcoin futures ETF. That kind of gets you one step where you can actually now allocate through a vehicle, but at the same time, it doesn't give you the direct exposure. We'd probably have better tracking for the actual underlying asset. I think price volatility, there's no doubt about it. If anybody's looked at the space or experienced it, there's massive upswings and downswings, but I think that goes with any new technology and any new adoption of in this case, a monetary asset. And so if you look at Amazon, if anybody went back to 1997 at the IPO, you go over the first 10 years, you probably enjoyed about a 3,600% upswing. That's a pretty meaningful return. By no means was that a smooth ride. You had to experience the tech bubble, and if you continue to hold through that, God bless, and then you had the ability to reap the benefits of that. Bitcoin has kind of experienced the same thing, where obviously there's been this dramatic increase in return, but along the way, if you've been able to understand and have a true conviction around the thesis of a hard asset, it's made a lot more sense to hold it. I think the challenge is, going back to Ron's headline there, is with the millennials that just throw assets at it, is there a thesis? Is there any thought? Have they had any guidance from a financial advisor, from sort of an investment advisor that could sit there and say, let's think about position sizing? That's where I think there is a huge gap in the market. And they are still looking for guidance if they're willing to accept it or not. And so if we look at investment trends, I think this goes back to the macro landscape. If you think about why people are investing in the space, I think there are a lot of folks that say, this seems fake. What is it? And what it is actually, it's a monetary network that was created based on technology. So it's using cryptography, it's using a decentralized network that basically there's no central body that governs any of this. And so many folks will look at Bitcoin to be this digital gold. Could I have ownership, and that representation is shown on the blockchain that anybody in this room could go and look at. And you won't see Chris Baker's name, but you'll see a public wallet address that's attached to a Bitcoin quantity. And from there, you could say, this is very immutable in the way that you can send it, and also it's very transparent in the sense that nobody can change the characteristics of it. I can't sit here and get a group of people to say, we're going to change the supply of Bitcoin that comes out every 10 minutes. That's fixed and programmed. And so what happens is you have this first asset really in history. Even if you compared it to gold, we don't have that because you could have more or less miners that come and try to mine gold. For Bitcoin, it's going to happen every 10 minutes. And so every 4 years, there's going to be a programmatic cut in supply. And so that cuts in half. And so the next one will happen in about 2.5 years or so, 3 years. And what we'll see is the supply that comes into the market every day is cut in half again. And so then this becomes a supply crunch. And really the only way that we're seeing that expresses itself is through the price. And so what's happening is I wouldn't say that Bitcoin's getting expensive. I would say that the dollar that allows you to buy Bitcoin is becoming probably a little bit less strong. You're not able to buy as much Bitcoin because your purchasing power back to the North End sandwich that's now $20, that obviously costs a little bit more. And so people kind of correlate that as well with a portfolio diversifier. So when you think about correlation in a portfolio, that's something that anytime you're thinking whether it's a 60-40 portfolio or whatever the breakdown might be, it's how do these assets move in conjunction? And so what we've seen with Bitcoin over the last 5, 6, 10 years is that it really has been uncorrelated. There might be microcosms of significant correlation of both the bond market, the equity market. Think of March 2020. There was a dramatic drawdown both in the Bitcoin market as well as the broader financial ecosystem. But at the same time, we've seen different recovery rates on assets across the board. And so Bitcoin really has, I would say, moved to its own beat. And along the way, what we've seen is it's been a very good portfolio diversifier with the proper position sizing. And I think that's the strong caveat with all of this is, someone of my age obviously stands up here and talks about Bitcoin. People say, well, is there a dramatic tilt in the portfolio for millennials and others? But I think really the narrative should be, we're not talking about 10%. We're not talking about 20%. This is really 50 basis points to 300 basis points. Being very calculated with how much risk you're willing to take, but then looking at the Sharpe ratio and how that does for the portfolio. And so Fidelity's run a lot of, back testing and looking at, potentially future testing for Bitcoin in a portfolio. And this happens in our asset management division. And really what they've found is probably somewhere in between the 1% to 2% makes the most sense because it is enhancing the portfolio returns with a very minimal amount of added risk because of how small the position is. If it goes to 0 at 1%, you lose 1%. But if you have the option and potential to go 10x, obviously there's a pretty asymmetric return available for you. And so if we look at venture capital and tokenization, I would say that that's a little bit more in the esoteric assets. You've probably heard and noticed I really have only said Bitcoin for most of the presentation so far. That's important. Fidelity right now just supports Bitcoin. And I think that is a bit of a stake in the ground from us saying Bitcoin has been deemed not to be a security. That's pretty clear to us. There's a lot of other assets out there that I would argue might not need to exist. There might be potential, and we'll talk a little bit about some other areas of the market, but I think Ron was right. You're seeing, what could be part of like the tech bubble, but in very microcosms of it. So if you think of 2017, there was the ICO craze. It's called the initial coin offering. You saw anybody and their brother coming out and creating these, small projects, but what happens is it's me and my brother John, and it's entirely centralized. And so what happens is we're kind of incentivized to benefit ourselves, and that in end becomes, probably an unregistered security for how the issuance, the minting, and the burning of these tokens happens. And so what happens is it's effectively been impossible for anybody to truly create a second Bitcoin because of the way it was created with a pseudonymous group. We don't know who the creator is. There is no individual that can control it. And so it's really been this, this fight for, I would say, second place, or this fight for another asset that exists out there. But I think Bitcoin really is driving towards a very narrow scope. It's not trying to be everything to everyone, but it's trying to be a very hard asset that has very secure and transparent protocols that underpin it. And we've seen that play out. It continues to be extremely resilient. As much as people want to believe in it or not want to believe in it, we've seen for the last 12 years that it has not gone away from China banning it 18 times at this point. We've seen regulation kind of be slower towards the marketplace, and it continues to just drive towards that macro adoption. And I think in the realest form we saw it in 2020 when people started seeing printed stimulus checks come into their pocket, and they said, where is this money coming from? And so you start to go down this rabbit hole of like, what is money? And I think that's where we've seen a lot of folks dive into that and say, well, is money seashells? It's now fiat currency in our system. It used to be gold. We had the gold standard. But if you look back in the 30s and you look at Executive Order, I believe it was 9102, when basically the US government said, we're going to require citizens to give back their gold. And you're required to do that, otherwise you have to pay a penalty. If you get caught, you pay, I believe it was $150,000. And so that's something that you saw the control shift back towards the government. They started saying, we can take control of this, and we're going to manage the monetary and fiscal policy, the issuance of currency that basically underlies our entire financial system. And so what's happening with Bitcoin is people are seeing this high potential with this very transparent monetary policy, and they're saying, could this be a new option? It doesn't have to be everything, but could this be a place that I can store value and store some of my family's wealth? And so what we saw here is a lot of the investors that we surveyed, obviously the high potential for upside is exciting, but that can't be the only reason. You have to know the name of the company, you have to understand what a company does. Same thing in the crypto world. You have to understand why Bitcoin has value and why maybe the 10,000 other assets out there may or may not have value. And I think it's unfair to really conflate all of those into the same bucket. But unfortunately, the media and anybody that looks at the space, it's mind-numbing. I remember when I first started researching it, in 2013, it was very difficult to understand. But then again, when I did a deeper dive in 2017, it's how do you sift through all of it and understand one has, really clear characteristics and others might be a little bit more centralized and not really achieving what you want out of this, particular ecosystem. The other, I think it kind of goes hand in hand, but people look at it as an innovative technology play. At the end of the day, what we're seeing in the growth of both price and adoption, it's a technology. So you're seeing an S-curve adoption. Basically, we have somewhere around 100 million users in this ecosystem today. The expectation is by 2025 we'll be closer to 1 billion users. And I think one thing that I see time and time again is here in the US, it's a lot easier to say, we don't need this. There's less of a need for it. But if you talk to somebody in Africa or South America and they've seen their currency and their personal wealth be hyperinflated and they can't get it from the government, they can't get it from their bank, and it's no longer valuable, this clicks much faster. And so we're seeing it in real time with El Salvador, which I'll talk about a little bit later with, or actually right here with basically the Lightning Network. This is an area where I don't think many people have really done a deep dive or really even understand that it exists. But so Bitcoin is really, it's a base layer protocol. It's technology. It has, basically an 8-page white paper anybody could read. And what it's trying to do is it makes some very clear trade-offs to be a very secure platform, but also offering the ability to send value anywhere in the world using the internet. And that's exactly, a parallel to what the internet was. So I was obviously a bit younger when the internet was growing and adopting, but I've grown up with that my entire life. And really what was happening was you had this information ability now to send that anywhere. So instead of having to rely on US Postal Service, and you could send letters, you could, then you could start to send faxes or emails in a matter of seconds. What did that do to our jobs and our day-to-day life? We're now seeing that ability with value. So you're taking monetary value that could be sent anywhere in the globe in a matter of essentially minutes with final settlement. But the problem is there's very clear trade-offs. So when you compare Bitcoin and Visa, so Visa, for example, you could have anywhere from, on average, 2,000 to 4,000 transactions per second. Bitcoin, on the other hand, is probably around 7 transaction bundles per second. That is a dramatic delta. But what people, I think, misunderstand is Bitcoin is probably more similar to Fed wires. If you're thinking larger transactions, obviously going at a much bigger clip. On the second hand, if you were to build a layer on top of that, so what Lightning is doing is basically creating off-chain payment channels. And so El Salvador is utilizing this basically to have over 2.5 million citizens now have access to the Bitcoin network using a Chivo wallet, which is just a company that created a wallet that was available for them. But what's interesting is you saw El Salvador shift from their own currency to the US dollar to now adopting Bitcoin as legal tender. And so what you're seeing is they're creating this optionality that not only are they not controlling their own currency, they're allowing a decentralized protocol that's a technology to be the option for all of their citizens. And we're seeing a pretty dramatic increase in adoption. As I said, you're seeing over 2.5 million people using that today. And the Lightning Network now is only about 3 years old at this point. And so I think this idea of a layer 2 is something that people forget. I think Bitcoin has to be everything at its base protocol, but you're able to build upon that while still utilizing the security that underlies it. And so to touch on another area, so decentralized finance, if anybody hears the buzzword, probably DeFi, I would say there's probably clients that maybe have approached any advisor in this room or here and there to say, I'd like to look at DeFi, or I'd like to understand more about it. What DeFi is really, it's decentralized finance. What you're looking at is basically automated smart contracts where you have individuals or groups entering into what I would call financial instruments in more of a decentralized way. You're not reliant on some sort of central intermediary. And what we're seeing is in the Ethereum network, it's by far the largest, and you're seeing a lot of these assets continue to be locked up for the ability to gain higher yields or to reap potentially higher values. But what's happening is as these assets are locked up, that's a clear indicator of how many people are using it. So now we're seeing billions of dollars locked into these networks, and obviously individuals that are now trying to find, and I think scraping for areas that can get extra yield. Anybody in this room would be very quick to tell me, and I would fully agree, there is added risk. If you're getting something that's giving you a 79% APY, what is the risk involved in that? So I think I would caution this, that while it's exciting and we're seeing the growth of DeFi, there's still a lot of due diligence and a lot of risk that's involved with it. And so that goes back again to position sizing. And if anybody's going to have, say, a crypto exposure of 1%, maybe 90% of that 1% is Bitcoin, and then a very small sleeve, maybe 10 basis points, would be something that they could go into some of the more esoteric assets. The last piece that I'll touch on is stablecoins. So stablecoins, I wouldn't say are the most exciting piece of digital assets, but what it is it's really, stablecoins is the ability to have a digital representation of some sort of pegged asset. So it could be US dollars, it could be treasury assets. And what it is it's in more of a private way. So it's less a central bank that controls it. And so I draw a little bit of a parallel. There are things called central bank digital currencies, so CBDCs. And probably the most prevalent one right now is China. They are making a very strong push to have their digital yuan. And what will happen is likely at the Olympics, they'll push forward to say, can we present this to our citizens and potentially the world to have sort of a shift in the monetary power across the world. The challenge is you're giving up, both privacy to the Chinese government and also control for them to still control the monetary supply. So I don't think central bank digital currencies are that different than what we have today. It's just in a digital representation. Stable coins, on the other hand, you have basically either a basket or an underlying peg to some sort of fiat currency, but the supply of those is just users contributing to the digital ecosystem. So you can see here, it was about a 20 times increase from 2019 to 2021 in the size of the stablecoin market. And what that shows is really the trend that we continue to see is you have people that enter the space, they don't tend to leave for whatever reasons, whether it's into Bitcoin, Ethereum and the DeFi networks, or you see it into stablecoins. They tend to then convert amongst assets. I think it develops an understanding. People are educating themselves with the broader ecosystem once they're using things like stablecoins. It allows for faster settlement and then likely better privacy as well than, say, a digital backed currency by a central bank. And so I would maybe wrap here in just saying that I think from my day-to-day and speaking with financial advisors and institutions, it doesn't start with an allocation. And I think I'm not naive to stand up here and say that there's probably many skeptics in the room saying, even if we could, we're not ready to allocate to the space. What I would say is you're having financial institutions like Fidelity or BNY and others that are starting to build out businesses that are creating the platform where you could have access to it. And it always starts, I think there's 3 buckets. It starts with education. As an advisor, as an individual, why would I own Bitcoin? Why would I even allocate to any of this space? The second piece is, even if I understand the technology, do I have an investment thesis? What is my position size? What is there actually, why would I own Bitcoin versus Ethereum versus Polkadot versus other assets? Some of those may have value, some of them may not. And so I think it's just like looking at equities. Some companies during the tech bubble, they just had a .com. And quite frankly, they got funding. And we're probably seeing, you see some of that in the crypto space as well. But what sifts through is there is value that's being created. And I think the last piece would be just operationalizing it. So as I said, we just focus on Bitcoin. We look at it as a macro store of value. It's a hard asset that clients could hold in the portfolio. And that's the progression that we're seeing is advisors want to be educated to just answer the question. I think that is step one. I think that's still where we are, is clients come to them and say, I have a question about Bitcoin. And people don't want that question because there isn't, the expertise or the understanding around the space. So why would you want to look at something that you haven't spent time on? The second piece, really around the actual operationalization, that's not going to be a good word, operationalizing it. So putting it into practice, essentially, is what you'd be able to do there is, I think a lot of folks are waiting for actual products. And so saying, I'm not going to, and I'm not being forced to touch this space until I have a stamp of approval from the SEC on a physically backed ETF. And I think that's okay. I think you'll see the early adopters that may benefit from the upswings, but those that adopt it later on, they could still have the exposure for the right reasons. And I think in this case with Bitcoin, it's typically right now, I would say, a hedge against inflation. So I think all of that to be said, as a financial advisor, I don't think the questions are going to stop coming, whether you like it or not. I would imagine it will continue in some sense. And I think it is an opportunity. Over the long term, we've seen some advisors and multifamily offices say, we're going to carve out this business, and it's going to give us a little bit of a diversification edge against some of our peers. We now offer it. We're bringing outside business and outside accounts more in-house. So rather than a client holding $1 million at Coinbase, it comes under your roof. And I think in a bigger sense, looking at the millennial shift, right? You see this generational wealth transfer. I think we're going to continue to see that. And whether that slide's right or wrong, or tongue in cheek with 90% of millennials throwing money into it, it is an opportunity to see that money go from baby boomers to millennials, and I think there's a greater adoption that is welcomed amongst the peer group there. So thank you for the time. I know this was a little bit of a different topic than what's mostly covered, but if anybody has questions afterwards, obviously happy to answer that and explain more of what Fidelity is doing. So thank you.
Thanks very much, Chris. The key thing here is going to be your client's going to be asking regularly now about digital assets, so the education is key on this particular topic. We're going to go into about a 20-minute break now. We'll be back here around 10:45 or so. Capital Wealth Planning, our friends, are sponsoring the break. Please join us in the other room. At around 10:45, we will have a panel. It's going to be really cool, featuring key industry leaders discussing new opportunities and obstacles, what to look forward in the future. So we'll see you back here in about 20 minutes. Thanks very much.